Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have. Again, we have CPI data, PPI data this week, retail numbers, and market has been very resilient to mostly negative news in the market, and earnings season has started. So today the goal is to figure out what to do next, right? What is the short-term plan, long-term plan, what strategies work, what strategies do not. Ask your questions. We're here to support each other. There's no judgment, so please, feel free to ask any questions you might have. The goal is to help each other and support each other with your trading journey. My background, I was Executive Vice President, Head of Technology at Options Express from 1999 to 2007. Options Express was an online broker-dealer acquired by Charles Schwab. Started Tradespoon in 2012. Worked for several financial startups here in Chicago. That's my background, building technology, trading. Want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures: trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we get into a trading plan, well, let's talk about current market conditions. We just have, which day were Friday, retail sales. We just had retail sales, a little bit better than expected, right? 1%, expected 0.9%. So that's good. PPI data a little bit worse than expected. And then CPI data. And basically, Chris Waller spoke yesterday. We have more Fed speakers. Raphael Bostic is speaking, basically saying that 100 basis points interest rate is still on the table. The core scenario is 75 basis points, kind of within the expectation, and then the economy is not as bad as everybody thinks. And as a result of that, well, let me see, market is up, right? Market has been pretty resilient despite completely different reaction from what we had in June. And this is something we talked about, that short-term market is extremely overbought. Oversold, and it's due for a rebound. So spiders continue to rally. Let's look at 1 hour chart. Okay, so I'm looking at 1 hour chart. July high is around 390. June reactionary high on end of June, same level. And we had two gaps back in June when we had worse than expected CPI data and more hawkish tone, 75 basis points instead of 50 basis points. We had kind of the opposite reaction, right? Market was, I guess, overbought and market sold off, and now we're trading higher. So from technical perspective, spiders, a lot of overhead resistance is closing the second gap from the June CPI data. And this is also July high, and we're getting very close. So I assume the path of least resistance is to the upside. We are in the middle of the earnings season. Today we have Citigroup up 10%, Wells Fargo up 8%, right? They're extremely oversold. JP Morgan had bad earnings yesterday, closed the gap. Morgan Stanley was actually much higher than before the earnings. So you can see a lot of it has to do with earnings. Most of it has to do with the tone from the Fed, right? And perception, more of a technical trading, right? United UNH up 5%, and TSM, right? The semiconductors are up. So far, pretty positive reaction, but still trading in the range. From technical point of view, nothing has really changed. QQQ is trading in this range. We said 280 is a strong support. We've retested it last week. We've retested it this week. 280 is your support. Overhead resistance, we're approaching 296, right? 296, we're, within striking distance, could be this week, could be next week. And then what to expect next. The next decision, the next big event is a Fed decision, right? There's high probability that it could be 100 basis points. Core scenario that it is 75 basis points. So from my perspective, nothing has changed from technical perspective, technical trading. So if you look at the one-day chart, again, a lot of overhead resistance is at 391. I would consider trimming your long positions at 391 because this is where the downtrend overhead resistance, right? I still think that market will break this level. Probably, if the Fed raises 75 basis points in end of July, right? We have 2 more weeks. Then we could get as high as 410, 420, right? Because market is oversold and you see a reaction in Citigroup, Wells Fargo, and I assume that would be the theme of the earnings. Despite worse than expected earnings, market still rallies. So this is, so I propose to, let's see, cancel, clear, right? I propose to, this is the overhead resistance number 1, right? And, it will be the same thing. If it's a core scenario, 75 basis points, then more likely or not, we will retest February low, right? February low has been a very strong overhead resistance. This is resistance number 2. And that's where I would, if this is, you start selling, this is you start selling more aggressively, right? Because I still think, based on the earnings season and based on the macroeconomic events, that this is probably not the bottom, right? We've talked about this last week. Is this the bottom, right? Is this the bottom? And I guess this is the right question again. You know what everybody said last week? Let's ask this question again. Is this the bottom? So how many of you think that this is the bottom? And when I say the bottom, it doesn't have to be 360. Even if it's 350 is the bottom, or 355, it's within striking distance. 1 day or 2 day price action, will not make a difference. So, but is this the bottom or close to the bottom? How many say yes? And how many of you say no? Joseph, no. Dennis, 285. 285 is the bottom, or what's 285? Or KQQ is 285, not sure. Mark, no more switch down, okay. Dennis, the bottom 285 on spiders. Wow, that's a pretty low bottom. All right. Anyone else? Anybody think that this is the bottom? Okay. So that's my answer too. I don't think this is the bottom, right? So if this is not the bottom, right, then sooner or later market will continue to go lower. Then the second question is, okay, if this is not the bottom, then how far will the rally go, right? We already retraced, well, right now only 5%, but overhead resistance, the first resistance is 8%, the second resistance is 15%. So the second question is, well, most likely we will reach 390, right? I think it's reasonable to assume based on today's price action. But the question is, are we going to retrace, 8%, or are we going to retrace, 414? So let's write this level. So how many of you think that R1, we will not, market will only reach R1, or how many of you think market will reach R2? Right, resistance 1 or resistance 2? Where is this rally going to end, right? If this is not the bottom, then the next logical question, where is the rally going to end? Is it resistance 1, resistance 2, or let's do this downtrend from the January for 40, right? The resistance 3. So how many of you thinks R1, R2, or R3? Right, those are the 3 logical resistance level. Downtrend from end of March, right? That's one resistance level. Resistance 2 is reactionary low from February, the start of the Russia-Ukraine war. And then R3 is the downtrend from the beginning of the year, right? High 1, high 2, maybe high 3. All right, so R1, R2, R3. All right. R2, R1, R2, R2. Okay. Okay, so I agree with R2, right? I agree with R2. Half of you said R2, some of you said R1, nobody said R3. Okay, nobody said R3. So I agree. So I think this is temporary bottom. We reach R2, and then during the end of the earnings season, right? As we head towards the end of the earnings season, which is usually around middle of August, right? Middle of August is when Apple, Microsoft, Google, mega cap technology, energy names, Schlumberger, Halliburton, consumer staples will announce earnings, railroads, transportation sector. So by that time, most of the S&P 500 companies, 75 or 85% of S&P 500 companies will announce their earnings. People are going to start asking, well, then what, right? They'll remember that JP Morgan had a bad earnings. And I think, starting, either September or October is where that level is going to be breached, right? So I think it's September, October, somewhere in the time frame. So that's important to decide, right? Kind of where the market can go next. Okay, now that we have, what are some of the indicators that we need to keep an eye on? One is, to me, 10-year yield. I mean, yield in general. You can see that inflation is record inflation data from CPI, PPI, but market is forward-looking, right? Nobody really cares about what happened, in June in terms of inflation. Now everybody is going to care about what's going to happen in July and August. And based on the interest rates, right? Interest rates are not going higher even though we're in inflation. Gold is selling off even though we're in inflation. So market, basically, the way I interpret this information is that all of the inflationary data is already factored into the prices of the stock market, and market doesn't anticipate accelerated increase of acceleration going forward. It anticipates the other way, deceleration, right? That inflation data is going to start subsiding, right? And you can see it in oil prices and copper prices and commodity prices in general. So lower inflation. So that's short term. This is positive for the market, right? Market likes when yield is stable. It doesn't jump from 1.6 to 3.5. It's also not going to like it if it's going to drop from 3.5 to 1.5, right? So important level to look is this 2.7%, right? April 11th low, right? We've touched this once, twice, 3, 4. Most likely we're going to touch it 5, maybe 6 times, right? But eventually yield, this level is going to be broken, my opinion, right? So my opinion that eventually this level will be broken, and if it's going to be kind of this, violent move to the downside, right? I think that's when that second level of that second wave of sell-off is going to start, right? Because the theme is changing, right? This was inflation, right? Everybody's worried about inflation. Now everybody's worried about recession. And that usually is reflected in the yield prices, right? Right now we have inversion of yield, and it's not for 5 minutes, it's not for 1 hour, it's been days, right? Where 20 basis points, where 2-year yield yields more than 10-year yield. It doesn't have to be, it's not a great timing indicator saying that, okay, market is going to sell off in 5 days from now, but it's a good indication that the bottom is probably not reached, right? And that more likely than not, we still have more room to the downside. And this will be the sign on the opposite. Once yield curve is going to steepen, instead of inverting, it's going to steepen the other way, then that would be the sign that we're probably somewhere close to the bottom. We can start talking about where is this bottom, 285, 315. Nobody knows, right? It's just too early to tell. And I would keep an eye on the dollar, right? So far, this has been a next popular trade. Everybody who bought oil now buying dollar, right, as a hedge. And dollar continues, this upward momentum. It is down 0.5%, right? It's down probably almost 1% from its top. It was as high as 109.3. It's 108.1. So it dropped by close to 1%. So you do have this reversal. For the rally to continue, for the market to reach 410 level, right, on S&P, dollar needs to pull back. So I would keep in a dollar, right? If next week we have kind of more of the same, then it's a problem, right? But right now it's kind of A, B, C, right? So the question is, where does this ABC pattern ends? If this is close to the end, right? If this is close to the end, and then the next move is pull back to this breakout level, right, which is around 105, 106, that would be bullish for the market, right? That would carry the market to probably close to 410, 420 level, somewhere in that neighborhood. So I would look at that. High yield looks like it's breaking out, right? It failed in June, right? So we're reaching June high, and this was May low, right? So important level. If that momentum carries forward, right? One day usually doesn't set the trend, but if next week, Monday, Tuesday, we're above this line, then high yield is going, probably to this February reactionary low or March low. So high yield is important, currency is important, treasury market is important. What else is interesting? QQQ is underperforming high yield, right? It hasn't broken through this July high, so still underperforming. Semiconductors are underperforming. ARK Innovation is negative. Gold miners are still weak. Let's see, railroads. So value stocks are outperforming today, up 1.5%. QQQ is up 1.1%. Oil is up, metals and miners are up, weaker dollar, right? Highly correlated to the dollar is energy prices. And let's see what else. That's about it. Apple, right? I would look at Apple. Outperforming, it's, we've discussed this yesterday, it's facing this huge overhead resistance February low, right? It's gonna probably will take good earnings to beat that number, to break through this level, but outperforming nonetheless. That's the bright spot in the market. Microsoft is underperforming, right? It still hasn't reached the July high. Tesla, same thing, underperforming. Google, underperforming significantly. And then what else we have? Facebook and Amazon, consumer discretionary, also underperforming. So pretty weak price action here. Any questions so far? Thank you, Kevin, for your opinion. Yes. So our president, Biden, is meeting with Saudi prince, right? That could move the energy prices. I do agree with that based on this outcome. So far, it's extremely oversold. It reached the 200-day moving average. Usually it's a good pattern. This is actually the level, exactly the same level we were prior to Russia-Ukraine war, right? So one could assume that any positive outcome of that meeting, or at least there is no negative outcome of that meeting, kind of status quo, we could have big reversal in oil prices. I don't think we're going to reach the highs but 50% retracement, it's reasonable to assume that, oil is extremely oversold. I still paid a lot of money yesterday for oil, even though it's dropping, but still pretty significant. We'll get back to 100, 105 level, right? 50-day moving average. So it's reasonable to assume we'll get closer to 105 level, which is 10% move in oil prices. Okay. Any questions? All right, so how do you trade? This is all nice and wonderful. How do you trade? How do you take advantage of this volatility? Well, if we said that, well, it's very simple, right? Well, not very simple. I make it sound simple. So you have support 1, right? You have support 2. So we know that 370 has been a good support. It held this week despite all the negative PPI and CPI print, right? And last week. So this is support number 1, this is support 2. Below 362, there is no support. I mean, it could be 350, it could be 340, just depends. But once the support is broken, you know that you need to probably step out of the market, right? Yes, if you're a trader, right? I mean, if you're a long-term investor, you think we're close to the bottom, fine, maybe you don't need to step out of it. But if you're a tactical trader, aggressive trader, below 362, there's really kind of nobody knows. Next level is probably 350. Everybody talks about this, so I'm going to make an assumption that market is going to pause at 350. So S1, S2, right? And then you know that you have R1 and R2, right? That's what everybody on this conference, on this broadcast said. So these are your levels, right? You sell here, right? You sell premium here. You sell out of the money calls. You can, if you think 410, maybe, once we reach 390, maybe it makes sense to sell 410 call spread, 410, 420 call spread, or any other. If you ask me about Microsoft, I'll say, same thing. When spiders reach 390, then you sell call spread on Microsoft or Apple or Rivian or Bitcoin. Same thing. You look at ETF. This, that this is your first resistance. We reach this level or getting close to this level, you can sell, if you're very aggressive, you can sell 400 390 call. If you're less aggressive, sell 410, 420 call spread. And you go to probably October, right? Probably October or November, because we said that this level is probably be broken by September or October. That means for the next month or two, we might be trading in this range, right? So this is where you sell 1, and this is when you sell 2, right? Or sell N3, a little bit more aggressive, because I think this level will be broken. So if you sell 390 call when we reach this level, I think you're taking a lot of risk, right? Because if that level is broken, then you would have to repair the trade and roll it up, right? But I think 415, 420 is much better support levels. And same thing, every time market drops to 370, then you sell out of the money put spread, right? Or you buy stock, depending what you're comfortable with, right? So this is where you do buy 1, right? And short term, I wouldn't do very aggressively, but buy 2, right? This was a good entry level to kind of get a little bit more bullish at these levels. Any questions, right? So that would be the strategy. Obviously, there is a lot of earnings announcements. So one way to take advantage of extra volatility are selling out of the money premium. You have to be careful, like we did Wells Fargo, it's trading against me. But what else we did? So Wells Fargo is one trade. So here I collected 22 cents and it's trading against me 77 cents, right? Because Wells Fargo, again, it's extremely oversold. You have a rally, so you have a situation where the stock is up 7%, where usually it doesn't move more than 5 or 6%, but it's facing overhead resistance. So you do have to be careful. This is why I encourage you to just do one contract on these strategies, right? Because you can have 2 times estimated move, right? Wells Fargo moving 7%. Last time it happened probably 15 years ago. So it can happen. So you have to be careful. I encourage you to do one contract, right? One contract is $4,000. Okay, so now I'm down, $50. Okay, so it's a manageable loss. So the same thing with TSM, right? Sold put spread. This trade is going in my favor, right? So should be up 40 cents on TSM trade, and then so it's a law of numbers, right? You can have one trader like Wells Fargo, but then you have TSM, you have JP Morgan, right? Same idea, sold 108 put, sold 116 call. That trade was profitable, and what else we did? And Pepsi, right? So as long as you do one contract and you do multiple of these names, 9 out of 10 trades, would be, historically has been successful, right? 9 out of 10 trades has been historically successful. Liquid names with tight bid and ask spread, large cash flow. I mean, you do get caught with these rallies sometimes, so you just have to manage the losing trade, and I'm going to close it, right? I mean, I can wait till Monday, but what if Wells Fargo jumps another, $4, right? Then instead of losing, $1 or 50 cents, I'm going to lose $3. Since I don't know, right? Even though there is a lot of overhead resistance at this level, I'm not going to take a chance and close this trade. So that's one of my favorite strategies. Another one is you can look at the positions QQQ, right? Calendar spread, right? I'm bullish on technology short term, right? I think the market is oversold, so I sold 280 put, right? It's trying to see if I can maybe gain 50%. If the premium drops by 50%, so around $6, maybe close this position. But at the same time, I'm bearish into December, right? Or October, November. So I have, you don't want to be naked 280 put, right? That's $28,000. That's way more than I can afford, or in average small account. So I encourage you to be long and short the market at the same time. So I'm short 280 put, but I'm long 240 put, right? And I'm also long 280 to 60 put spread. This is probably one of my largest positions. Because short term, I think QQQ can continue going higher, right? We can have similar reaction in QQQ, and it looks like 280 has been a strong support. But longer term, I think we're heading lower. So the point I'm trying to make is to have spreads. Probably portfolio neutral, delta neutral portfolio, right? For one long, you have one short position. Right? For one long, you have one short position at this point. And the idea is market rallies, you close your long. As the market drops, you close your short. Some of the rules that I follow are, again, cash. Market is going to be volatile. Most of you said this is not the bottom. Then by definition, I would say at least 50% of your portfolio should be in cash, right? And treat options as an equity, right? So you might be, very popular question, people were saying, well, what if I have 4 contracts, right? And I only buy calls, 2.5% of risk, right? That's what I propose. Okay, so my drawdown is 10%, right? Right, and this is calls, right? So let's say these are calls. Well, first of all, I propose not to trade calls, either credit put spreads or credit call spreads, or debit put spread, debit call spreads, but kind of the same point. So then I have 90% in cash, Vlad, and then everybody says, well, what do I do with this 90% in cash? That doesn't make any sense to me. That seems to be very conservative. So my answer is that if you have 4 calls with 2.5%, you see market can move 10% in 3 days. So, you don't want to be risking more than 10% of your portfolio. That's answer number one, right? You don't want to risk more than 10% because these 4 calls can go against you very quickly, or vice versa. You can have 4 puts and market rallies 10%, then you lost on your 4 puts. So that's one answer. The other answer, well, look at what your calls are, right? If you're trading, let's say QQQ, and QQQ is trading at 280, you buy 1 call, you don't really have all of your money is in equity. You think it is in, but you're buying a derivative of an underlying stock, right? Or ETF. Or same thing, let's say you did Wells Fargo, right? Which is a $40 stock. 1 call, it's not really, you spend 40 cents. You obligated to buy $4,000, right? If that long call is in the money, you're obligated to buy $4,000. This is where options can get very tricky. So on the $10,000 portfolio, you look at your statement and it says $9,000 is in cash, but in reality, it's not. In reality, you trade in options. They're a derivative of the stocks. I encourage you to go through this math and realize that right now, if you have 2 positions, Wells Fargo and QQQ, not only you don't have 90% in cash, but you also have a lot more exposure to technology than Wells Fargo, right? Assuming you're doing 1 contract. So you always want to translate equity options contract into equity. And I propose to follow this rule, even though you might get very itchy that you have, you open an account with $10,000 and $9,000 in cash, and you think market is oversold and you want to start deploying it. And the biggest mistake I think new traders make, because they see 90% in cash, then they have 8 positions, right? They follow CNBC and Bloomberg, and in one day you can open up 20 positions, and you don't really know which position to open, and you probably don't realize that in this bear market, everything trades in very high correlation to each other. So if you do 8 positions, and let's say you do 5% as your rule, well, if you have 8 bullish positions and 5% drawdown, then you could be down 40%, right? And that's a problem, right? That is the biggest mistake all the new traders make, right? They see a lot of cash, or they want to buy on margin. Market rallies, they think it's going to go to 420, so you start breaking your rules. Instead of 4, you have 8 position. Instead of 2.5%, you give 5%. 40% you cannot recover. Very few people can recover from 40% drawdown. 10%, 10% drawdown, that happens more often than not. So you just if you turn, one way to deal with these drawdowns, again, don't have 4 bullish position. If you think that this is not the bottom, I encourage you 2 bullish, 2 bearish, right? You can have call spread and a put spread. If you trade in stocks, you can have SPY and SH, right? That that if market goes up, then SPY will rally. If market goes down, then inverse ETF will rally, right? But then that you're not going to be in a position where all your 4 positions are down, right? So that is one of the main rules I propose. Again, wait for 2 to 3 days to confirm trend change, right? We talked about this. I was talking about stock forecast toolbox, positive trend, even though we reached 370, right? And a lot of people actually 2 days ago, when there was a CPI print, said that we're heading lower. A lot of people said we're going to break 270 level, and I said yes. You have day 1, day 2. Wait for the day 3, right? Usually it's a 2 to 3 day rule to confirm the trend change, and that's where you can get caught, where you have third day reversal and then follow through and positive trend. Right, so as of right now, this is a range bound trading, right? We're gonna have up day, down day, and we're just gonna trade in this range until market is able to break out of this range. What would be the best level to close it then? Do you use price or percentages? I always use percentages, Mamadou. So when do you close the trade? One way to do it, like in this QQQ, I sold it for $12. Once it's $6, then I would exit out the trade. Or if it goes the opposite, right? If it goes to $18, then I would close the trade. So on the long dated option spreads. So if you're talking about option spreads or long-dated option spreads, that would be the strategy. The other strategy is, again, look at these support and resistance levels, right? You know, if you're long, doesn't matter what you're long, you want to start selling here, whether it's a spread or whether it's a stock position, right? Because this is overhead resistance. So you sell maybe half of your position because you're hoping and you think there is a good chance that if this level is broken, because market is oversold, then sell to. So I would start closing most of your long. I would start closing maybe 30% of your longs at S1 and then close the rest at S2. That's what I'm planning to do. Buying, you know, you've seen me, I was buying at 370, I was buying at 270, right? Those were my buys. That's not what I bought here, but that's the idea. So right now the strategy is you buy at 280, you buy at 270, and you sell at 300, you sell at 320. It doesn't matter if it's option position or stock position, right? If you have a credit put spread, you probably want to consider closing it close to S1. So thank you for the question. Dennis, what about Teslas telling people not to plug? What about Teslas and not to charge between 3 and 9 p.m.? I mean, Tesla suggests not to charge between 3 and 9 p.m. because it's expensive, right? So they do, you know, you get better prices if you charge overnight. I don't know if we have energy crisis, you know, maybe in Texas they don't have enough energy during these peak hours, you know, but I don't think it's going to affect the market. So I'm not sure if it has any. Mamadou, thank you. Joseph, should I start adding? Right, sell one, you can add to your SH position, right? So 291, I mean, the way market looks, right, there's no, what's the next week? Where's the negative? We've seen kind of, you know, doesn't matter good or bad earnings, right? I mean, JP Morgan did not have a good earnings and they are up 3% today, right? They're actually turning positive. Same thing with Morgan Stanley. So earnings probably doesn't matter, right? You know, it's more important what Tom Barkin is going to say or John Williams is going to say. That's more important. So let's see, what's next week? Why is this page not being updated? Let's see. But I think the next main event is our earnings, right? And Fed announcement. I don't think it's next week. I think it's 2 weeks from now. So I still think there is more room for the upside, right? There is more room for spiders and to continue going higher. But once we get to 390 level, then yes, I would consider adding to SH, Joseph. Thank you. All right, so Elite Circle, I encourage you to try this service. Again, what do we offer? One is the morning bell and closing bell. One thing I do strongly, suggest that you don't trade alone, right? Because when you're at home in front of the TV and all you do, that's why I actually love these webinars, and I very appreciative that you guys are participating, even though we're in the middle of the summer. Is that you want to be part of some kind of community, right? Maybe it's on Discord server, maybe it's on these GoToWebinar, but you participate in live trading rooms, right? Especially if you don't have a full-time job. If you do have full-time job, I understand completely. Then review the recordings. Once a day, spend 15 minutes on YouTube, watch our recordings, right? So you can at least see the questions that everybody's asked and understand the context. Because blindly, just by looking at these position and repeating the same positions and orders. The unknown is the allocation, right? Because if I say during webinar, you should have two, not sure you should, but I propose that you have too long and too short, you don't see that just by looking at this line. You kind of see, well, Vlad sold 280 put, right? But you don't see that I also have, let's say, IWM put spread and that I have SH, or that I am market neutral. So I encourage you to not to trade along. This is probably the biggest mistake you can make. So if you can participate, I understand this is financial commitment, but we also have, without financial commitment, you can go to YouTube, sign up for Tradespoon, and follow us on Wednesday. So Wednesday you have morning bell, you have closing bell, there is a recording. So watch it. This is free information, right? You don't really have to pay for it, and you can ask live questions, right? So I encourage you to participate live. If not live, then through recordings. So that's what Elite Circle offers you every day. In market moves every hour, right? So it's important to try to participate in morning and closing bell. We have recordings. You see all of my trades, how I manage the trades, every adjustment, winning, losing trade. You can see my orders, you can see my positions, and you get SMS messages. So I think that's a lot of level of support that requires, doesn't matter if you're just start trading or you've been trading for 20 years, right? I've been trading for 20 years. I talk to traders. I talk, we have a lot of traders on our forum, on our broadcast that are, experienced traders, and we're sharing ideas, right? Nobody knows everything, so it's important to participate in this community and have that sense of community where you can always rely on each other and ask questions. So I encourage you to not to trade alone, especially in the bear market, and to participate. Any other questions? So that's a lead platform. Okay, we have 15 minutes. Let's go over some of the tools. I showed you the stock forecast toolbox, my favorite model. I haven't found anything better, actually, especially in bear market, because it doesn't care about the news, right? CPI up, PPI down, it doesn't know. It just says, look at the current trend. So it's been saying that market oversold and positive trend, and it's been accurate, right? Today it predicted 380 overhead resistance. We are actually trading, at 383, right? So it's a good sign that this bullish momentum is only going to get more bullish because we are breaking above key overhead resistance, which was 380, right? And S&P. So you look at this data. How can you interpret this data? That 82% of the time we actually 380 and 370 will hold. So maybe 383 is a little bit overdone. It needs to pull back to 380. But more importantly, the trend is positive. So for the next 10 days, do expect that the market is going to make higher lows and higher highs for the next 10 days, right? Then you switch. You say, okay, what does the model thinks about, next 6 months, right? So you go to 6 months. Support is 360, overhead resistance 413, negative trend. So longer term, right? Shorter term, model thinks, well, for the next 10 days, we could make higher highs, higher lows. But for the next 6 months, we're going to make lower highs, lower lows, right? And a lot of people get confused by that, right? A lot of people ask me, favorite question now was Tradespoon, right? Active trader says, let's say American airline is in uptrend, right? Buy it, right? But the time frame is 1 or 2 days, right? This is a 1 or 2 day prediction, not beyond. But you look, let's say it's stock forecast toolbox, American airline. Well, it's still positive, but sometimes it's negative. Let's make an argument that it's negative. Again, active trader is a day trading, 1 or 2 days. This is 10-day forecast, right? So sometimes stock American airline can go up in the next 2 days, but then it'll go down in the next 10 days. So it's important to understand the time frame. That this is the most common question and the most common mistake I think traders make, right? Because usually they don't have sense of exit, right? They don't have timing of the exit, and they don't understand that market can go up and then it can drop, right? They're saying, well, if the model says go up, why would it drop, right? They get upset when the market goes up 10% and then drops 10%. That doesn't make sense. Well, Stock Forecast Toolbox said it's going up and then it dropped. Well, because there's some event happened, right? Like CPI is worse than expected, 75 basis points raise 50. That's what drives the market. It's not the model, right? Model usually is really good when there's no events, right? And it's kind of equilibrium between buyers and sellers. But as soon as there's some kind of event that gets equilibrium out of balance, right? In June, there was an event that got equilibrium out of balance. Now the same kind of event, worse than expected CPI, potentially 100 basis points, and we're up 10%, right? So completely different reaction of what it was in June, what, you know, versus July. Why? Well, you know, now the news do not affect equilibrium between bulls and bears, and equilibrium shows uptrend. You know, same thing, equilibrium showed that the market was oversold at 380, right? And I actually thought we're gonna potentially get to 430 level, but we didn't, right? Because some event happened and the market dropped. So that's how you interpret the data that the model shows you, and it's very important to do that. So that's Stock Forecast Toolbox, 10-day, 6-day. It shows you the trends, it shows you support and resistance level, and that's extremely important. We do have Active Trader if you want to day trade for 1 or 2 days, right? It'll suggest you a list of stocks that can outperform the market. American Airlines, Boeing. We have Weekly Trader, same thing. If you try to hold position for a couple of weeks or a couple of months, we have these different services where you can either use our suggested entry or exit prices, or Spread and Shadow Trader, you can actually follow my trades along. All right, any other questions? Fast looking Spider intraday. Spider's intraday, let's see, intraday. So you can also look the intraday predictions where the Spider's trading, 384.77. No, it's correct, 384.77. It's, I mean, the timestamp is incorrect, but it's the prices are correct. Thank you, Faust. Any other questions? All right, meanwhile, Spiders is up 2%, QQQ is up 2%, semiconductors up 2%, value stocks up 2%, Dow Jones is up 2%, banks up 3%, consumer discretion. So we have a broad-based rally. You notice we either have broad-based rallies or we have broad-based sell-off. Sometimes, like yesterday, semiconductors outperformed, right? Semiconductors were up yesterday, 2%, and value were down. But that divergence is only going to last, you know, couple days, you know, maybe a couple of weeks, but that's about it, right? At some point, you know, only because banks were oversold and they had better than expected earnings from, you know, Citigroup and Wells Fargo, so XLF is outperforming QQQ. But at some point they will converge, right? So do realize that these divergences happen because of the earnings. They're short-lived, and you do not want to have more than 4 positions at 2.5 or 2.5% maximum loss. Nizar, why are Chinese stocks? That's the answer again, the same thing. FXI outperformed here, right? And everybody says, well, start buying China, right? Start buying China because it's outperforming. The down market, you know, started a lot earlier, right? It's down, you know, God knows how long, much. Let's see, right? So it's down 50%, and it started, you know, it peaked in January of 2020, right, as opposed to January 21. So in the past couple months, everybody says, well, it's outperforming. You turn on Bloomberg, CNBC, they say China is outperforming, they're reopening their economy, and okay, and then everybody's pushing in this trade, right? Up 30%, right? S&P is only up 10%. Okay, let's pile into China. But then it's down, right? And then everybody's asking, what the hell happened? Why is China down? It's the same thing, right? Everything is going to trade in high correlation to each other. Yes, China starts selling off earlier. Yes, it's down a lot more. So you do have a bigger rebound, right? Just like ARK Innovation, right? ARK Innovation is the same setup, right? You know, it's peaked a lot earlier, you know, well, not, I guess, same January 20. Oh, no, January 21, it peaked the same time that the China stock. It's down, you know, 77%. And it rebounded, you know, 30%, right? So everybody's like, oh, okay, let's start buying ARK Innovation and these high beta stocks. But in reality, you cannot have a situation where China is going to continue to rally and the United States is going to continue to sell off. That will not happen, right? They're trading in very high correlation. Maybe it's certain multiple, certain beta, right? China, biotech stocks, high beta stocks, they have higher beta, right? Beta 2 compared to Spider, so beta 3, right? If Spider is down 30%, China is down, you know, 70%, or ARK Innovation is down 90%. But there, one is leading the other, and they only gonna stay together, you know, diverge. Sorry, they're only gonna diverge for a short period of time. So this is more of a technical trading, right? Yes, you can say, well, you know, they're opening the economy, they're closing the economy. The answer is no, it's a technical trading. And if you said that, you know, market where the bottom hasn't been reached, right? Then the bottom hasn't been reached in ARK Innovation and in FXI and in Bitcoin and in any other asset class, right? Timing could be off, right? Market is up, China is down. You know, if I have to guess, you know, strong dollar, this vertical move in a dollar is not good for emerging market. It's not good for China, right? They can, you know, they're gonna have hard time, you know, refinancing their debt and et cetera, et cetera. You know, they're very highly leveraged, you know, with all their construction and all of their, you know, projects. You know, they have huge debt, and you know, strong dollar is not good for that, for emerging market. So Nizar, let me know. Nizar, yeah, so same answer, PayPal, you know, Bed Bath Beyond, Roku. You know, I would think about them as one asset class, right? Just because PayPal is down more than, you know, 80%, that doesn't mean, just because PayPal is down 80%, that doesn't mean it's gonna all of a sudden outperform QQQ, right? So whatever I said on QQQ, same opinion on PayPal, right? Actually, PayPal is very weak right now, so I wouldn't stay away from PayPal. It doesn't exhibit any life, right? So until it has earnings and all of a sudden we have a big jump on earnings, maybe. Trying to predict this event, it's a flip of a coin. So PayPal, same bucket, Roku, same bucket, Best Buy, same answer. You're trading the same name. One thing I hope you realize, and then all of these names, FXI, Roku, Best Buy, it's one position. If you have 4 positions, that means you're overly leveraging yourself, right? And you know, the answer is the same that I have QQQ. Best case scenario, 300. I mean, my core scenario, we get to 317. That's my core scenario, right? Worst case scenario, we top out here, and core scenario 320. You know, best case scenario, maybe we'll get a little bit higher, and then we're going lower. And PayPal, nor ARK, nor China will not have any different, you know, path. All right. Any other questions? All right. And yeah, my final thought, you know, you look at the different newsletters, you look at different subscriptions, different news channels, And people say, you know, banks bottom down, it's time to buy them. You know, my opinion that anything you want to buy right now, the only way to do this is, again, long-term investment. That you think we're close to the bottom, or you basically saying, I don't know where the bottom is, right? I have no idea where the bottom is. So I'm going to start slowly buying. So I'm not saying don't buy PayPal, but all I'm saying, if you're buying PayPal, it has to be very long investment, right? And you have to realize that more likely than not, this is not the bottom. And, you know, if PayPal is at $40, don't be surprised, right? The idea is if you're buying PayPal at 72, you really want to buy it at 40. Right? Because this is like 0.5% discount. You don't want to be a situation where you buy PayPal at 72, you buy it at 56, and then at 40 you sell everything. Because more likely than not, when you will sell everything, that's when the market is going to reach the bottom, right? Usually market reaches the bottom when everybody sells, right? Majority of the, by definition, the market bottom when majority of the people sell all of their position. They can't take, you know, the pain anymore. That's when the bottom is. Right, and you start hearing on the news, people get on a margin call, this hedge fund blow up, this hedge fund blow up, and Warren Buffett, you know, gives a credit line to Bank of America. Then you know that's the bottom, right? Until you hear that, if you're buying PayPal at 72, more likely than not, I'm not saying this, but more likely than not, it will get to 60 and it will get to 40. So if you bought at 72, you have to be with the mindset that you're going to buy it again at 40. If you're going to sell everything at 40, then you probably don't want to buy it at 72. That's my opinion. Now, so I use all charts. Longer term, I look at the weekly charts. I look at the daily charts, right? Short-term trading, I look at the daily chart, and then I look at the 1 hour chart. Okay. So short-term trading, day trading, short-term trading, I usually look at 1 hour, 1 day. Longer term, I usually 1 week, 1 day. Kevin, spider's resistance again, I think, well, obviously this one, right? This is the gap, 1, 2. This is, you know, going back to middle of June, right? So medium-term resistance, this is first one. I mean, we're already close to this, so you could almost assume we're going to get there or get very close. The second one is this, right? Resistance 1, resistance 2, right? Gap 2, right? This is gap 2, and this is gap 1, right? So I think we will get to this level, right? Looking at the current price action, you know, the best setup is when everybody is negative and market rallies on bad news, right? This is a great setup because you usually know that we're probably, at least short term, just too negative, right? So I think it's a good setup to at least get to, not at least, but to get to R2 realistically. So that's what I think. All right, what else? I don't trade Forex, I don't trade crypto. You know, again, it's the same. Right now, they're very highly correlated. All it is extreme leverage, which is fine. I encourage you to trade the smallest contract. If you trade in Forex, Euro, US dollar, only trade one contract and the smallest you can find, right? Because, you know, just keep in mind, it's going to trade in high correlation to ETF, FXE, right? And it's going to trade high correlation to QQQ. Realize that if you buy in QQQ, most likely Euro is also going to rally, right? Right. So if you bought QQQ and you bought a Forex Euro, you long Euro, it's one position, it's not two. You're not going to have a situation where Euro rallies and QQQ sells off, right? That's what I'm encouraging you to kind of understand, right? And one thing, you don't want to be in a situation where Euro is down and, you know, you buying crypto is down and you bought QQQ and it's down, and you think you diversify, you think that one that has no effect on the other, but in reality, they're all highly correlated. So you're either going to be up on crypto, Euro, and QQQ, or you're going to be down on all three. And if there's a divergence, it's going to be very temporary, you know, maybe a day, maybe a couple of days. So this is just Mamadou. I encourage you to keep that in mind. In a down market, right? In the bear market. All right, that's all I have for today. Thank you very much. You guys have been great. if one thing I want you to get out of this trade, don't trade alone. Don't sit in front of the computer all day long. First of all, walk, do some yoga. You know, I have my Oura ring. I'm wearing my Oura ring. Almost forgot about my Oura ring. It's charged, right? I'm gonna go out, have a walk for half an hour. You know, do some push-ups, something along those lines. And the second thing, don't trade alone. Don't eat alone, right? That's not a good habit. Don't trade alone. It's not a good habit. Stay engaged, stay part of the community, join forums, join our YouTube, participate in GoToWebinar. We have Discord, and that would be my one thing I want you to get out of this presentation. Thank you very much. Have a great day in the weekend, and I hope to see you either closing bell today or Monday morning in a live trading room. Thank you very much, and have a great day.